The world is going through a period of disorienting change. Events are unfolding that feel entirely new to us, but they aren't random. They are mechanical and predictable, following a repeating rhythm that has defined every major empire for centuries. At the most recent Munich Security Conference, the message from the world's top leaders was clear. The post-World War II global order is officially broken. When the systems meant to maintain peace and trade begin to fail, the old rules of safety no longer apply. We are entering a phase where the stability we've taken for granted is giving way to something much more volatile. To see how this affects your own wealth, look at August of 1971. The United States was spending far more than it earned, and international banks were rushing to exchange their paper dollars for physical gold. In response, President Nixon went on television to announce that the U.S. would no longer honor those exchanges. The country had run out of money. Ray Dalio was a young clerk on the New York Stock Exchange at the time. He arrived at work expecting the market to crash. Instead, stocks rose by nearly 25%. The government was flooding the economy with new, devalued paper money, and investors scrambled to buy assets before their cash lost its value. President Franklin Roosevelt followed this exact script in 1933, when gold reserves ran low. It is the same pattern of massive money printing we saw during the 2008 financial crisis, and again during the 2020 pandemic. By studying these patterns, Dalio realized that superpowers operate according to a trackable life cycle. Like a biological organism, an empire's health can be measured through specific economic and social metrics that signal whether it is growing or failing. Understanding these measurable indicators is the only way to anticipate the next shift in the global economy and protect your personal wealth before the rules change again. This is the big cycle. By tracking the Dutch, British, and American empires over the last 500 years, we see that dominant powers typically follow a 250-year arc from birth to decline. Every rise begins with a specific logical sequence. A new power invests heavily in education, which creates a surge in technological innovation and invention. Productivity gains in factories and shipyards allow the nation to dominate global trade. To protect that profit, they build a massive military to secure their trade routes and interests abroad. Eventually, the rest of the world begins using that empire's money to conduct business. This is the ultimate prize, the reserve currency. Reserve status allows an empire to borrow more than any other nation. Other countries are eager to lend to them, but this ability to pile up debt eventually becomes a structural weakness. During Phase 2, the peak of the cycle, success begins to take its toll. The workforce becomes expensive and less competitive, and the nation grows accustomed to a level of luxury that its actual productivity can no longer support. The empire keeps spending by leaning on its credit. This creates a massive debt bubble and a widening gap between the rich, who benefit from the financial systems, and the poor, who feel the system is no longer working for them. In Phase 3, the decline begins. The debt bubble bursts, and the government is forced to print massive amounts of currency to cover its obligations. This causes inflation to climb and the value of the money to drop. Economic hardship fuels internal political conflict. Populism rises as citizens look for leaders to fix a broken system, creating a domestic weakness that invites rising external powers to challenge the empire's dominance. This external challenge escalates through trade and technology wars, like the current restrictions on advanced semiconductors. This is followed by geopolitical maneuvers and capital sanctions meant to weaken the rival's financial system. Hot wars are rarely the start of a collapse. They are the final, visible symptom of an empire that has already been hollowed out by debt and internal strife. If we apply this historical framework to the United States today, the data places the nation in the late stages of Phase 3. The country is currently carrying over $37 trillion in debt. Internally, the country is divided against itself. Intense political polarization is preventing the government from making the difficult decisions needed to stabilize its finances. Externally, the conflict with China has already moved through the early stages of trade and technology warfare. Both nations are now positioning their militaries and financial systems for a much more direct confrontation. This combination of internal decay and external pressure marks the transition into Stage 6, a breakdown of the rules-based order, where outcomes are decided by raw power rather than international law. History shows what governments do when they can no longer pay their bills. They raise taxes, freeze assets, and print currency until it hyperinflates, the same process that saw prices in post-war Japan rise by 70 times. When central banks flood the market with money to manage a crisis, holding onto cash or government bonds becomes a guaranteed way to lose wealth as the currency loses its value. To protect your savings, the strategy must shift. This involves moving away from paper currencies and into hard, unprintable assets like gold and essential commodities that maintain their value even as a currency fails. While the decline of a superpower is a historical certainty, your own financial ruin doesn't have to be. By recognizing the data and aligning your strategy with the actual movement of history, you can protect what you've built from the collapse of the old order.